I'm Gary Stevenson, former trader and people's economist. This is Gary's Economics. Today we've got a guest on the channel, Matt Zarb-Cousin. He's director of Clean Up Gambling. He's here to talk about trading, crypto, gambling, and everything that's happening in the economy right now. Yeah, and we'll get going, yeah?
Nice.
Matt Zarb-Cousin, welcome to the channel.
Thanks for having me.
So I'm just going to introduce very quickly to the people watching how we got to know each other. So as people who've been watching the channel know, I've been doing a lot of talking about markets and about crypto in the last couple of years. And because of the stuff that I've been talking about, a few of my friends sort of saw stuff that I said about things like gold going up, things happening in the markets, and they got involved in financial markets, they got involved in trading. And I found that a few of my friends who followed my tips actually managed to lose money, even though these were winning tips. And from that, I started to realize a lot of other people I know had gotten involved in trading as well, gotten involved in cryptocurrency. And basically, I saw a lot of my personal friends losing money. I saw you give an interview on some channel on TV about gambling. It sounded like you knew your stuff. You're obviously an expert in gambling. And I got in touch with you to see whether basically you had seen these things happening, because the people we see on the internet, YouTube and Instagram, generally talking about online trading, crypto, they seem to be making money. But the people in my personal life who are doing these things seem to be losing money. So as an expert on gambling, what are you seeing?
Yeah, I think it must be very easy to convince yourself if you bought into one of the cryptocurrencies maybe 6-7 years ago when it was a few $100s, and you saw it go up to $30,000, $40,000, to feel like an expert, to feel like you really know your stuff, and to want to impart that wisdom to others. So I think we're seeing a lot of that at the moment. There's lots of people that bought into crypto very early on who have made a lot of money. That's indisputable. But they've made a lot of money because they've been able to sell their crypto to people who are buying in now. And that needs to be sustained if people who buy in now want to make money as well. So what you see is a lot, I think, on social media now is this phenomenon of almost what I call crypto evangelism, where you'll see people buying into particular coins and then becoming their biggest salespeople almost. And the newer kind of social media platforms like TikTok, I think, are really geared towards this, because if on TikTok the algorithm works in a way that if you watch a piece of content to the end, it will start showing you lots more of that topic and really take you down rabbit holes. And the amount of videos you can watch on TikTok in a short space of time, it lends itself to almost conditioning, and it can be very, very persuasive, particularly if people have made money in the past. So I think that all of these things contribute to fueling the crypto bubble, and that's really what it is. Because I think people, I don't know to what degree people are buying into it because they feel like they're owning a piece of the future, or if people are buying into it because it's a speculative asset and they just want to make a bit of money in the short term.
So my concern is, I think if you are, a young person on the internet now, researching these things, crypto, and it's not just crypto. There's also FX trading, CFDs, spread betting. All of these trading activities have become massively more popular in the last 2 years. If you search these things on, for example, YouTube, you'll see loads of videos of people saying they've made loads of money. You'll see on YouTube guaranteed FX trading, guaranteed 100% profit strategy. I see guys on Instagram posting like 20 trades in a row. They made money in every trade. I think from the perspective of somebody watching this on the internet, it seems like everybody's making money. But I'm a former professional trader. And one thing I know about trading is people like to talk a lot more publicly about their wins and their losses, right? So I was wondering whether you, as somebody who, you work now, we'll talk a little bit about what you do now. You work for a gambling charity, basically, that helps people recovering from gambling addictions. Are you seeing a lot of people who've made losses on these things?
Yeah, I mean, our focus with Clean Up Gambling is obviously we're trying to change the law so we can prevent gambling-related harm. And in the work that I do with GAMBAN, which is blocking software for people that get addicted to gambling, we work very closely with the National Gambling Helpline with GamCare, which provides treatment. and they're reporting a huge increase in people phoning the helpline saying that they got addicted to crypto, CFDs, Forex, all these types of platforms that exist, I think, at the moment on the regulatory perimeter of the FCA, of the Financial Conduct Authority. They're not really seen as gambling products, but they are linked to gambling-related harm. So we've started to block these platforms now for people that use GAMBAN, the blocking software, because we think that if you're addicted to gambling, it's just going to, you can self-exclude from gambling, and you can block gambling sites with our software, but it's not right that we leave those sites, those types of platforms accessible, particularly crypto. And it's the volatility of it. I think that anything that lends itself, even day trading and through retail investment platforms like free trade, anything that lends itself to over trading and constantly checking the app and being nudged into changing your position all the time, which is what these platforms make money on. They make money on the commissions on the trades. Is not optimum retail investment strategy. And if you were actually convinced that everything in the future in Web 3.0 was going to be on the Ethereum blockchain, you wouldn't get hypersensitive about people saying that crypto might crash. You would.
Yeah, I put a video up about crypto in the last few weeks, and I've been relatively outspoken that I think crypto is basically a scam. We'll get a lot of negative comments from me just saying that. I think that I think essentially it's a scam, basically. These coins are invented by industries, basically, and they sell them to ordinary people on the promise that they will go up, and people buy them because they think they will go up. What I find interesting, I put this video up, is, I get very, very angry replies about this video, okay? And, I'm a former professional trader. I was, at one point, the most successful trader in the world, one of the biggest banks in the world. I've got a very good track record trading. I've got my predictions for this crisis out there, published. People can go and look at my early COVID articles. Everything that I said would happen has happened. Gold price went up, stock prices went up, house prices went up, exactly like I said would happen. And I'm expressing an opinion about markets. And when I say I think the gold price will go up, nobody gets angry.
People that are hodling gold don't start to troll you then, do they?
When I say property prices will go up, some people get upset, but nobody gets angry. But when I say I think the crypto price will eventually fall, people blow up. Why do you think it is that people are so emotionally attached to the idea of crypto going up?
Because I think it's what it represents. I think it is like people have a lot invested in it, in terms emotionally, but also financially. People are involved, and they do become, as I say, they become almost de facto salespeople for these coins, because they want everyone to buy in, so the price goes up. They kind of understand. This is like that thing, like a little bit of knowledge is a dangerous thing. They kind of understand what it is and the implications of it and what it could be used for in theory in future, but they're perhaps not totally convinced about that.
Yeah.
And
it's interesting what you say, right? If they were genuinely 100% confident that these things were going to be used in the future, well, then why do they care if I say it's going to go down? That's an opportunity for them to buy more off of me.
Exactly,
cheap,
buy more, exactly. And
so
it is a risk and it is a gamble, and I think reminding people of that is perhaps where the sensitivity comes in. But it's a very interesting phenomenon, and I think it's very unique to the time that we're in that it is what is often described as a disruptor. It's part of that kind of, we're moving from what people describe as Web 2.0 to Web 3.0. There's it's similar to the dot-com boom, when you had lots of pump and dumps, you had lots of penny shares and all that sort of stuff. People were saying this is the next tip, this is going to be, and obviously only a few survived. It was Amazon, it was the big ones, right? Yeah. But there was all that kind of stuff around the dot-com boom. So it's similar to that sort of time where people think, oh, maybe I could pick the coin that will underpin the internet of the future, right? But there's so many coins now, and there's not really an understanding of how this is going to work in practice.
I'll tell you what concerns me. So I met a guy the other day. I was just at some Japanese event, And I met a guy from Ilford, actually, which is my hometown, also Simran's hometown, cameraman, who's not yet been shown on camera. He will one day. Nice guy. And, you know, we were just doing the natural conversation. What do you do? What do you do? And he said, I'm doing this right now, but actually, like, my plan is to become a millionaire. And I was like, all right, how are you going to do that then? And he's like, I'm gonna make my millions on crypto. You know, when crypto goes up, I'm going to make my millions. And
sounds good.
It does. But if this guy's life plan is to make millions on crypto, right? And like, that's his long-term strategy. Is this guy in a position to unemotionally assess the long-term prospects of crypto?
Yeah.
Or is this person in a position to be exploited by somebody who wants to sell him crypto?
Yeah, exactly. You're leaving, it's exploiting a vulnerability, isn't it? That's it. And people feel, yeah, emotionally invested in it. They're not looking at it objectively. And yeah, I think that it's almost like because they don't fully understand, perhaps, I think no one really fully understands what the use case of it will be in the future and how that would actually work. People are taking a risk when they're investing in it, and they don't want to feel stupid having done so. And then they become very defensive about it. So, look, I just think that it's part of the symptom of the times that we're in at the moment economically, where so many routes to progressing and climbing the ladder of social mobility have been cut off through government policy, through central bank policy.
I mean, this is, you know, my channel is mainly about inequality, right? And it's about letting people know, look, if we don't do something about inequality, then we're going to get really bad economic and human outcomes for like you and for your family. But far and away, the number one most common message I get on this channel is, come on, mate, tell me how to make some money in the markets. And I understand that, number one, right? Because I've been poor. I know what it's like to be poor. When you're poor, you don't want to be poor and you're looking for a way out, right? But also, I don't know what to tell these people because there's no safe way to make money nowadays. Like my dad, he worked for post office for 35 years. And, you know, we were never rich, but he was able to raise 3 kids, you know, buy his own property outright by the end of that, just working like a regular job, like no degree, no special skills.
Yeah. You know, like there's, you know, the Simpsons, right? And
yeah.
I like that meme when they say that Homer Simpson was able to support a family and own a house, you know, a massive house, working at the power plant, right?
Yeah.
So like that was it. That was normal.
Yeah, that was normal for my generation, you know, presumably for your parents' generation.
Yeah.
But it's that increasingly now, you will never get property doing that. You will never get property doing that. You know, like I've got a mate, he works in fashion, but he makes like 70 grand a year now. You know what I mean? He's like, it's like the most money you'll make like for like a regular job in fashion. Right? It's a great salary, right? And he lives with his mum, saves up every penny, but the house prices go up quicker than his deposit. So like we live in a world where even if you do everything right, this guy went to the top fashion union in the country, you know, even if you do everything right, even if you work as hard as you can, even if you save everything, you can't get property. So this puts young people in a situation where they're thinking, well, what do I do then? And then if you then see on the internet a load of guys saying like, oh, I made £2 million on crypto.
It's FOMO as well, right?
Yeah. You know, and I got friends calling me up and saying, you know, you must have this as well, right? Calling me up saying, should I get involved in crypto? And I just have to tell them, don't do it because it's dangerous, man. Save up your money as much as you can. There are safer avenues you can get and figure out ways you can get yourself property. You know what I mean? I have to tell them don't do it because it's dangerous. But like the message I'm telling them is, look, the situation is not good here and it's not going to be easy. But the message that other guys are selling is, buy a coin with my face on it, you can be a millionaire. And you know, who's got the more attractive message here? You know, so, but if you put sort of young people, you know, not just young men, but especially young men who are getting judged on these financial outcomes so aggressively, when you put people in this position where there's no legit way, you know, if work is not working, you know, if what our parents did, work hard and save, doesn't work, then you're desperate, right? And you're looking for anything.
Exactly,
yeah, it worries me.
Absolutely, and I think the social media culture and scam culture is all kind of. I think it's another symptom of that, because, look, I think we're in an era now where everything is changing again, and there is going to be a lot of disruption, as I've sort of alluded to before. But I think people's assumptions about how protected they are as consumers are being applied to things that, frankly, are falling outside of regulation, or regulation to the level that people expect. So when you're looking at things like leverage trading on stocks and things like that, which is basically gambling, and it's marketed as a form of investment in a context where interest rates are very low.
Yeah.
And because interest rates are very low, your money's not working for you. You're falling behind in terms of how saving for a deposit, and the house prices are going up even more. And you're looking for ways to accumulate more money, and obviously crypto in that context is very attractive, in the short term, because that's what it is. That's what people treat it as. They're not treating it as a long-term investment. They're not treating it as, oh, this is going to be the underpin everything we do in the future.
Yeah.
They're saying, how can I make a bit more money so I can exchange it again for fiat currency and buy a house? And really, if you're investing, as you always say, you need to invest for the long term, right? You take a long position.
You touched on something very interesting, which I think is very important, which is the similarities between the trading, investing behaviors of people doing some of the things that are popular now: crypto trading, foreign exchange trading, spread betting. The similarities between that and gambling, because, you know, I was a former trader. I worked in the skyscrapers in Canary Wharf, and you see guys there with gambling addictions. I was a foreign exchange trader for a long period of time, and now I've got friends who consider themselves to be foreign exchange traders. And I look at what they're doing. To me, what they're doing is indistinguishable from gambling. They're sitting down in the day, and they're looking at this little red bar, this little line, a few green bars, a few red bars, up and down, up and down. And they're trading this all the time. They're drawing lines on charts. To me, these guys might as well just be reading their horoscope and then going into Betfair. You know what I mean? Like, that's not what professional traders do.
No.
But they've been persuaded that what they're doing is trading. But for me, what they're doing looks exactly like gambling. And I think we're in this kind of sort of dangerous space now, where things which I would consider are basically gambling have been rebranded as investment strategies and investment tools. And what that means is, you know, you do a lot of work with gambling, right? And you presumably see people who have addictions to sports gambling, or, you know, slot machines.
If people get addicted and they lose way more than they can afford, and they hit rock bottom, hopefully you can intervene before that point, obviously. But if they're in that moment, then, you know, everything that they've been telling themselves to rationalise gambling, like, I'm one bet away from winning it back and all that sort of stuff, you can quite quickly, in recovery, recalibrate that through cognitive behavioural therapy. You can say things, you can convince yourself of the opposite. I went through it myself, as I was addicted to gambling when I was younger, where it's like, you're never going to win long term, statistically impossible. Even if you win, you're just going to give it all back because you're addicted. So the only way to break that cycle is to stop. Now, if you're applying that to things like trading, it's very easy for people to think, well, I'm only losing money because I'm a bad trader. I just need to become a better trader. And I don't necessarily have to lose in the long term. There's people that win in the long term. I'm seeing them every day.
This is the thing, it's a rebrand. Like, I think, you know, we know that there's no mathematical way to win at blackjack, but people still get addicted to blackjack. You know what I mean? We know that there's no mathematical way to win long term at roulette, but people still get addicted to roulette. But when you're talking about trading, it's exactly as you say, right? Trading, and trading crypto as well, it's marketed as if you understand how it works, it's a reliable way to make money. Nobody would say that about most other forms of gambling, right? So what it means is you can become a gambling addict without thinking you're even gambling. You can be thinking, I'm a trader, you know what I mean? And you know, I was a professional trader, you know, and I worked in the city, but I get paid a salary. I don't gamble my own money, you know, when I'm in that space. But people are sitting at home, and I think one thing, I was talking to a friend about this, and I was like, most forms of trading, especially any form of short-term trading, it's a zero-sum game. For every pound you win, somebody loses, right? And not only that, but the websites themselves, especially if you're doing high volume trading, take quite a big cut. So that overall, if you add up everyone's wins and losses, the losses are more than the wins, right? So what we know is when everybody comes to the table and everybody leaves, net, people are losers, okay? Bear in mind, there are people at the table like me who have got 2 economics degrees, who have spent 6 years trading 100 hours a week. You know, when I was a trader, I wake up 5 in the morning, I read 100 emails, okay? I know everything that's happened overnight before I get into the office. I'm at the office at 6:30 a.m. I've got 7 economists, I can just press a button and speak to them. Every piece of information in the world comes to me first, right?
I suppose you could have even got all the resources that went into, like, you go to Brazil, presumably, like you'd send people there and have a look at the
I can speak to anyone, anywhere, all the time. All the information comes to me, right? And if you're doing like day trading, you'll compete against people like me who do this 100 hours a week, who have been doing it for 10, 15 years, who have devoted the last 20 years of their life to doing nothing but this. You know what I mean? And if you've watched a few YouTube videos, you know, what are you going to do next? Like, watch a few YouTube videos on how to run and race Usain Bolt. You know what I mean? Like, realistically, is this a sensible strategy? But people think they can win. And I would add to that, even me, when I was a professional trader, waking up at 5 a.m. every day, I didn't day trade. Because it's that difficult to make money, in my opinion. I was a long-term trader, you know. You make a long-term assessment, you put the money in, you leave it, you know, that was what I did because it's a competition. You know what I mean? There's a saying, if you don't know who the idiot is at the poker table, then it's you. If you think you can beat the markets, you know, you need to understand you're competing against professionals and have a really good understanding of what you have that they don't have. You know what I mean? Otherwise, you're probably not going to beat them. You know, I know this is... People don't want to hear this message because people want to believe they can get rich from trading. But it's the same with gambling, right? People want to believe they can get rich from gambling. People want to believe they can get rich from playing the lottery.
I think we're almost there with educating the public to the point that there is an acceptance that no one wins gambling. Like, even if you were able to get an edge over the bookmaker betting on racing or sports, they would just close or restrict your account down. So you wouldn't. So in theory, you know, you can't win on slots or roulette or blackjack long term because of the margin. So I think we're kind of in that space now where people are aware that it's impossible to win long term. So therefore, why do we not have strict affordability checks? Why do we not have, you know, limits to stakes and all that sort of stuff? So it sort of flows from that argument. But we're nowhere near that with this stuff, with trading. Right? To
me, it seems like a really successful rebrand of gambling. It's like people know that gambling is a vice and that it's ultimately a loser. You know, nobody's like, oh, my friend spends all day gambling, that's great. But people are like, I spend all day trading, that's great. It's a really successful rebranding of gambling in such the way that it doesn't have these negative connotations.
In my view, though, I think even if something causes gambling-related harm, it should have the same protections. So you should have things like self-exclusion and limits, and the Gambling Commission should be able to say, well, because this causes gambling-related harm, that should fall within our remit to some extent. And at the moment, that isn't the case, obviously. If these platforms are regulated, it's by the FCA. Even spread betting is regulated by the FCA. And there are reasons for that. There are other reasons for that. But you just don't have the same level of protections that are supposed to be in place for gambling. Obviously, they're not obviously delivered a lot of the time. But even so, there ought to be better protections, and they should apply to these platforms to prevent gambling-related harm. Now, I think that, you know, with all of these newer products, with all of these kind of crypto derivative platforms, there needs to be an understanding that if you're putting money into a CFD or into a cryptocurrency, that is a form of speculating. And if you're putting money into an ISA or into an investment fund, that is a form of investing. Like, there needs to be a better delineation between the two, because at the moment you can sign up to a platform and put money in an ISA and they can cross-sell the leverage trading. And you think these things are totally different. Like, how can you have the same thing on? How can you have that both on the same platform?
Yeah, I think the message I would like to give, I guess, to the viewers, because the problem is that there's this real spectrum of things you can do that move from relatively sensible investment, such as open an ISA and put some money into a global stocks tracker, which is relatively sensible long-term strategy, although it involves risk, all the way up to sort of leverage betting on new cryptocurrencies, which is basically an insane thing to do. And there's such a spectrum of grey in between. So I think, how do people differentiate? I think a key marker for me is the frequency with which you do it. So, you know, if you put some money in every month and it goes into something, and it just goes in once a month, you open the platform, money goes in, you buy that thing, that's probably not a problematic behaviour. Although I would caution anyone against putting too much into crypto. I think there's a very real risk that crypto goes to zero. So if anyone wants to have money in crypto, it should be considered very high risk. It should be only money you can afford to lose. But in general, if you're just accessing it to invest over a period of time, I would say that is investment behaviour, although it has to be said it has a risk. Whenever you start doing multiple trades in a day, or to be honest, even in a week, or really even in a month, unless you have some background as a professional trader, you're gambling, in my opinion. Do you think that's fair?
Yeah, it is absolutely fair. I mean, how can you compete as a retail investor? You just can't. And yeah, it is a gamble. And I think it's important that people understand what optimum investment strategy is. And I don't think that education is anywhere at the moment with the public. And I think people are looking at this stuff that's regulated as a financial service, and it's giving it that veneer of legitimacy that it perhaps doesn't warrant. Yeah, there was the investment video on the channel. People might want some sort of advice, but in general, you know, open an ISA, buy a range of relatively sensible investments. Stocks can be risky. I like a combination of stocks and gold. Diversify between things. Don't put any money into crypto you can't afford to lose 100% of. That would be my advice. But I think... So I just have a question about gold then.
Yes.
Right? So people often say like that Bitcoin is a gold disruptor and it's a store of value. But in theory, right, gold could... It's very unlikely for gold to ever go to zero because there'll always be a use for gold, like in production.
Yeah, they need to wear something in the hip-hop videos, right?
Exactly, and I'm sure it has other uses. Whereas Bitcoin has no use, there's no kind of
my concern with crypto,
use for it.
My concern with crypto is if you want, why does somebody buy crypto? Realistically, why do people buy crypto? In my opinion, and people might want to disagree, 99% of the buyers of crypto are people buying it because they think the price will go up. That's why they're buying crypto. They're buying it because they think the price will go up. And that's how speculative bubbles work. You know? And a lot of the time they're buying it because it has gone up a lot. But that's not sustainable, you know? This is, you know, the way trading works often is people like to buy things after they've gone up a lot. And that is how speculative bubbles work. And these, you know, only 2 years ago, crypto was worth something like 7 times less than it is now. So it could go back there. And 5 years ago, it's worth something like 10 times less. You know, this is an extremely volatile product. It could go to zero. And I believe in the long run that these things will go to zero. And I know people out there are blowing up because I think if they are blowing up, they should ask themselves, why am I so angry about that?
So some people will say, well, in the long run, everything goes to zero because, you know, we'll all die anyway. Or,
I mean, you say that, but gold hasn't been zero for a long, long time.
I mean, this is what people. This is the arguments you often see. You often see these kind of rationalizations.
I mean, look,
as well.
Your house, you're going to live in it. You know, you buy land, it's going to make food. You know, gold has been a store of value for literally thousands and thousands of years. You know, if you buy Tesco, you own those supermarkets. You own the land underneath them. You own the groceries inside them. You know what I mean? If you buy Apple stock, you own part of those factories. You own the patent to the iPhone. You know what I mean? You own part of it. Other things that you can buy have physical underpinning. You know, there are physical assets in this world. You know, I've got a video on the channel called What is Wealth where we talk about, look, there's property, there's land, there's natural resources, and people own this stuff. you have a choice. Do you want to own the physical resources of this world, or do you want to own these points on the internet? And when you give money to buy these points on the internet, there's some guy out there selling you those points on the internet, taking your money and using that to buy real assets. I guarantee it, you know? So it's not real. I know people will be saying, well, money's not real. So don't hold money as an investment either. You know, money is a terrible investment. You know, I keep enough money just to pay my bills and to make sure I'm okay if something happens. And I would recommend anyone else to do the same thing. Money is a terrible investment. So if money is a terrible investment, the only thing worse is imaginary money. Okay, people will get very angry about it. But it's money is a bad investment, and money that some guy made up is a bad investment as well. You know, what is a good investment is real physical assets. You know, and the best investment is a house for your family to live in, and you should work towards that.
Yeah, no, I mean, I don't disagree at all. I do worry about, just how much of a wild west all of this is, and how many people are getting sucked in. I came across a platform that was basically run by fraudsters that was taking people's money and saying they're going to pay you back in over a period of time, and they're going to invest it in crypto, and obviously it took all the money and ran off to Bali. So that was kind of, you know, there's loads of these things that people assume a degree of consumer protection because we're so used to it. We're so used to...
It's a good point. I would recommend strongly against anybody giving your money to anybody else to trade crypto with, or to trade foreign exchange with, or to do day trading with. Please, please, please don't do that.
No,
please don't give your money to any third party to do these behaviors, because those spaces are absolutely ripe for fraud at the moment. And like you see, people will sell things like a guaranteed profitable strategy. Like my friend follows this Instagram follower who trades gold, and they post pictures of like 20 gold trades in a row saying I made money 20 times in a row. And what they're doing is like they're buying gold at like 1821 and selling it back at 1822. So they're waiting for it to move this tiny little bit up and they take the profit. You know, if you do that, you're going to make money 99 times, and the one time you don't, you're going to lose 100 times as much. But it's a great strategy for advertising yourself on Instagram, right? And, you know, it's very easy to make yourself look good by like making very, very repeated, low risk, low profit trades which have this very tiny chance of losing enormous amounts of money, and you can get sucked into these. So yeah, it's, as you say, it's a wild west. Really, it's a wild west. And the big thing I want people to realize is most of these things are zero sum. So if you think everybody's winning, they're not.
No, exactly. And you only ever hear about the winners, right?
Yeah.
So
the losers are invisible.
They are. And the first thing you asked, I come across them a lot in the work I do. And you know, there's GamCare as well, getting a lot of calls about this on the helpline. Yeah. It's very, very similar. It is just like gambling. It's the same type of behaviours. It's the constant
and you probably see how damaging it can be.
Yeah, absolutely. And it lends itself to chasing losses. You think, you know, and all this stuff about buy the dip. I mean, like,
dollar cost averaging.
Yeah.
Yeah.
And don't worry if it's gone down. It's just a buying opportunity. Putting more and more money in.
This is classic. It just sounds like gamblers.
It's gambling.
It's exactly,
chasing losses, right? And justifying the losses that you've already experienced by saying, well, oh, okay, well, I can level this out because I can buy more of this asset that's going down in that's lost me loads of money already. So, yeah, I think people need to be aware of all of these myths as well. Like, and I know you're doing a good job of like educating people about the myths around investing and the terminology and all of these truisms, and you know, things that mislead people into these bad behaviours and unproductive behaviours. And I think that that's really been missing, and that's another thing that's ripe for exploitation. You've got this almost perfect storm, the lack of information and the economic context. And you know, you talked a lot about low interest rates and how that's fueled all of this stuff. And I think that that's part of the problem. People looking for a way to grow their money where one doesn't exist at the moment.
Yeah, I want to talk a little bit about just the cases I've seen, because I think this like sort of shows how easy it is, right? So I'm a former professional trader. At the beginning of the crisis, I wrote an article for a website called Open Democracy saying the gold price is going to go up, stock prices are going to go up, property prices are going to go up. And some of my friends got in touch with me saying like, oh, can we make money on this? And at that time, like, I was quite naive about how dangerous this could be. And I was like, yeah, you know, there's this and there's that you can do. to bet on the gold price, blah, blah, blah. And a few of my friends got involved putting bets on the gold price. And then a couple months later, the gold price dipped. And two friends separately called me up like, what are we going to do? We've lost all of our money. And like gold had gone up sort of like 15% and dipped like 3%. And I was like, how have you people managed to lose money when it's up 12% since I told you this tip? And what's happened, both these people did exactly the same thing. They waited for it to go up like 7%, and then they're like, oh, Gary was right. Okay, then they bought it. Then it went up another 3%, and they thought, I'm a genius. Not me, Gary. They thought they're geniuses because they've done this great trade. So then they buy more gold, and then it goes up a bit more. And then they're like, I'm the best trader in the world. And then they buy silver, and then they buy palladium, and then they're buying like Ryanair stock, you know, and then they're buying Tesla stock, and then they're buying crypto. And then suddenly things dip, and they lose everything they made and more. And this is what happens. And really, I saw what these guys were doing, and I realized like, oh my God, I've turned my friends into gambling addicts. Like by giving them a good investment tip, they've become gambling addicts. And the things that they did were insane. It's insane to do that. It's insane to take a tip from somebody else about gold and suddenly become a palladium trader. You know, what even is palladium? You know, and then these guys become Bitcoin traders. It's crazy, right? It's crazy what's happening. But I think that just goes to show sort of how easy it is, especially, you know, with these apps and these websites that make it look so attractive and make you feel like a trader, to start investing and very quickly become a gambling addict and have no idea that you've done it.
Yeah, totally agree. Yeah, people very close to me have got sucked into that stuff, to CFDs, and it can happen that's how it happens. You start to make a little bit of money in the short term and you think, oh, this is easy. Oh, imagine if I had leveraged this. And then and it's on there on the same platform. It's just,
it's indistinguishable from gambling. To me, it's indistinguishable from gambling. You could be doing the exact same thing on football results. It's the exact same sort of behaviours. Somebody gives you a tip, it goes well, you think, oh, that's great, maybe I'll do this, maybe I'll do that. You start doing more,
What's a good thing to kind of, I don't know, be aware of that when it's sort of spilling into gambling? Do you think that it's like, when if you're like checking it a lot, obviously, but you're only checking it a lot because it's that high adrenaline stuff, and you're getting a bit of a buzz out of it?
I think if there's like one quick sort of fail-safe, it's that trading frequency. If you are really, as an ordinary person, I don't think you should be doing more than one trade a month. And that one trade a month should be, I've got my paycheck, I'm saving 500 quid this month, I'm saving 200 quid this month, that goes into this. You shouldn't be trading more frequently than that. You shouldn't. You shouldn't. Like, who are you going to beat? Are you going to beat me? You know what I mean? You're trading against proper professionals here, you know. You know, what are you going to do next? You know, are you going to do the Olympic long jump? You know what I mean? Like, these guys are professionals, you know. You need to be an investor. And investment is about long-term, slow growth. I think another big red flag is like chasing really aggressive growth numbers. Like, if you're trying to make anything more than really like 5-10% a year, and those themselves are aggressive numbers, you can't do that without gambling, you know. So, but the big thing is frequency. If you are opening it more than once a week, you should not be doing that. And to be honest, I think more than once a month. Yeah, it should be an investment that you're trying to build up towards buying a property in the long term. And frequency is the big blow up for me.
So would you say everything comes back to buying property? That's the sort of end game.
I mean, for ordinary people, it's so difficult nowadays.
Yeah, exactly. That's the thing.
And you know, we could reach a situation sometime when I think property is a bubble. But the fact is, you need a place to raise your. You know, most people want to have a family. You need a place to raise that family. You know, and it's expensive. And I'm well aware that increasingly, it's not a realistic goal for a lot of people, a lot of families. And I wish that wasn't the case. But yeah, that needs to be your goal. You know, that is what gives you a little bit of financial freedom, a little bit of financial security. Yeah, I would say so.
I think as gambling's become normalised, I think you could argue that that's been the gateway to this type of new ecosystem that's developed, right? Like the normalisation of risk taking and the normalisation of gambling, and as embedding it in part of our culture, has perhaps opened the doors to all this type of other stuff, where the concept of risk taking and the act of it and the prevalence of it, we're so desensitized to that something like crypto is kind of the natural next step.
I think the way 2008 panned out is a big deal, because 2008 we saw this massive financial crisis where ordinary people got really badly hurt, and yet traders made a ton of money, and the stock markets exploded. So then people suddenly saw, like, oh wait, doing the sensible thing doesn't work, you know. But who else made money after 2008 in the last 20 years? People who like wildly over leveraged and bought like 25 properties, right? We've created this kind of economy where the people who do mad risks did well, and yet the people who do the sensible things, like just save your money up, you know, do a regular job, got really screwed over. And I think now in 2020, like especially, you know, on the internet, people are aware that will happen again, and that is happening again. Like, we're doing the exact same thing since COVID, right? Like COVID was the biggest ever single year increase in wealth of the rich and the super rich in this country. The average billionaire made £630 million. The average wealthy person saw their wealth increase by 22% in 1 year, which is about like 7 times the normal growth rate, the biggest ever 1 year growth rate. In the biggest economic crisis, the Great Depression. And now, gas prices, energy prices going through the roof, food prices going through the roof. So ordinary families are going to be really heavily hit here, whilst the rich are making more money than they've ever made. Stock markets are going through the roof. You know, the gold price is blowing up, property prices are blowing up. So once again, we're seeing an economy which deals with crisis by punishing ordinary working families and really rewarding the rich. But ordinary people just see stock markets going through the roof and traders making money in the city, and they think, I need to be involved in that world.
Yeah. It's a FOMO thing again, right? As well, like it's also making all of that world more accessible. So this whole thing about certain retail investment apps democratizing finance and democratizing investing.
That GameStop thing was like fight the power. People are talking about, people think Bitcoin is a revolution. A lot of people do. They say this is the way that we change the system.
Yeah, exactly. And so I think that's a veneer, again, another veneer that really hides what it's about. And, you know, it's presenting something that isn't optimized for a retail investor's best interests. So something that encourages and makes money out of people over trading and volume of trades, and masquerading as something that is in their interest, like, oh, we're making this accessible to you for the first time, and it's exposing a demographic and a section of society to this type of activity for the first time very often, and there's a lack of knowledge.
But one thing that I worry about with trading and with crypto is that, you know, I'm an economist and I focus on what's happening in the economy, and I've made a lot of very successful predictions that after 2008, we would have basically a long-run economic disaster. And I made a lot of money on that because those predictions were right, because we wouldn't deal with inequality. And I think we're doing the same thing again. So I think we're locking in a system now which is basically guaranteeing more and more ordinary families being driven into poverty. And that's a systemic issue, and that's because successive governments have dealt with crises in a way that hurt ordinary families and benefit the super rich. And if we don't change that, that will continue. And the only way we're going to change that is by ordinary people pushing back, coming together and pushing back politically, pushing back against politicians aggressively, saying we will not accept this, you need to do something about inequality. And yet, things like online trading and crypto basically appeal to sort of the most hungry, the most ambitious young people who want to change their lives for the better in a way that's completely individualistic and non-politicized. So it takes them out of the political arena. So these are the people who should be fighting back and saying, listen, this is a system which is screwing me, screwing my family, screwing my parents, screwing my kids, screwing my community, and instead, they're on IG index trading Bitcoin. That is the thing that really, you know, besides the fact that a lot of people are losing money and we're not hearing about it, this is just, it's like, it's giving people something to do while basically their houses are being taken from them. And it makes me sad, to be honest, to see that we're losing this fight, and like some of our smartest young people who should be helping us fight back are being dragged into basically trading internet points.
On the systemic issue, you made a really good point earlier when we were chatting about how COVID has accelerated a lot of this stuff. You may have said this before, but I thought it was just really a really good illustration of
so we've covered this on the channel, but we'll go through it again, which is like why COVID has increased inequality so badly, right? Which is economically, what COVID was basically banning rich people from spending money. That is economically what it did. Because if you're an ordinary person or a poorer person, the vast majority of your expenditures are on rent, food, mortgage, bills, and you still have to pay all of those things in COVID. So your expenditures don't really go down that much. Maybe you can't go to the pub, you save a little bit. But if you're a very wealthy person, your expenditures are largely on luxuries. You know, expensive holidays or expensive, meals, lots of expensive things. That all got banned. So what that meant was, during COVID, we basically banned the spending of the rich. Now, in normal times, there's a sort of circular flow of money, which is when ordinary people pay their mortgage or their rent, it goes to rich people. But rich people have very high incomes and they spend a lot of money, which drives the wages of ordinary people. But if you stop rich people spending money, ordinary people still have to pay the rent and they still have to pay the mortgage. So instead of money flowing around in a circle, it's just flowing from ordinary families to the rich and staying there. And then these guys have lost their incomes. So what happened was the government substituted the incomes with printed money. And then from the perspective of an ordinary person, the situation seems the same. Because you're getting an income, it's not from the rich anymore, it's from the government, so you feel you're unaffected. But that money is then flowing to the rich and just staying there, and just piling up and up and up and up and up. So from the very beginning of COVID, you could predict that at the end of COVID, it's going to look like we're just reopening the economy, but we're not. We're reopening the economy with a massive amount of cash in the bank accounts of rich people. And it's huge, right? Because the amount of money printed was £450 billion, which is £10,000 per adult, but it all gets accumulated by the rich. So if that all goes to the top 10%, we're talking about £100,000 cash extra in the bank account of every single rich person in the country. And then afterwards, when inflation blows up, everybody's like, how did that happen? It's like everyone's sort of confused about it, which is driving me mad. And I think sort of the big thing which I'm trying to push at the moment on the channel is to make people aware, look, this is not some natural disaster. This has happened because we allowed the rich to profit enormously from COVID. They've got way more money. It's government printed money. That's pushing price up and that's making your life harder. And the obvious way to deal with that is to tax this enormous amount of money they've made. But for some reason, nobody's talking about this enormous amount of money. The rich have more money than they've ever had before. Enormously more money than they've ever had before. And we have a crisis now, which seriously is going to mean ordinary families can't feed their kids and heat their homes. And yet the government is doing nothing about taxing the rich. In fact, they're raising taxes, national insurance, which is a tax only on workers, which excludes the income of billionaires.
That's crazy. Yeah, it's crazy.
It drives me mad. Yeah.
What you're seeing now a lot in America, obviously, is the growth of crypto sponsors for things like sports stadiums. And in Spain, they banned gambling ads. We're only allowed to show gambling ads between like 1 and 5 a.m. So they banned it from all like sports, La Liga teams. And they've replaced a lot of that with the crypto exchanges. And,
okay, classic.
And the CFD platforms and all that kind of leverage trading stuff. So I think like in our gambling review here, one of the things that I've been pushing for is if you're going to ban gambling advertising or restrict it in some way, the Gambling Commission needs to be able to identify newer trends in like what are effectively gambling products, and those restrictions should apply to those as well, because that's what will happen otherwise. I mean, already like Watford sponsored by stake.com, which is not just a crypto repository, but a crypto casino. So it's gambling with cryptocurrency. eToro sponsors a lot of football teams now already. That obviously has leverage trading and has crypto exchanges. So yeah, I think there's a risk that fills the void, and I think that we have to future-proof our gambling regulation to make sure it doesn't.
Yeah, and people out there who are seeing these crypto names everywhere, that legitimizes it, right? And it makes them think it's a safe investment.
Yeah,
but,
yeah. So this is the thing. Like you have the Advertising Standards Authority. It's obviously very slow and it's not really fit for purpose, but it's not able to act on things quickly enough. So it's out there. legitimizing itself, attaching itself to football clubs, attaching itself to different brands that and different cultural institutions that people trust. And by the time it's done that, the damage is done. It's sort of cemented itself within that particular ecosystem. So all of a sudden then football clubs are more dependent on that type of revenue. So then there's like a worry about over-regulating it. So it's all about legitimizing something that is, frankly, damaging a lot of people already.
Well, thank you very much for coming on the channel. Hopefully people who've been watching have learned something about the dangers of trading and crypto, and hopefully you might have saved some people from potentially falling into addiction. Have you got anything you want to talk a little bit about what you're doing or that you'd like the audience to check out?
Yeah, I mean, if you're interested in gambling reform and obviously future-proofing our regulations so people are protected if they're experiencing gambling-related harm on these new types of platforms, then head to cleanupgambling.com. If you are addicted to gambling or addicted to these types of platforms or cryptocurrency, or you know someone who is, then check out GAMBAN.com. That's blocking software, and that's free through the National Gambling Helpline, which is on talkbanstop.com.
Okay, thank you very much.
Thanks.